Yes, sir, guys. So I want to show you guys what happened on the markets. So this is a video that I posted 5 days ago, as you can see on my YouTube channel, which my YouTube channel is Aphiwe.Zunguu. So I posted this video 5 days ago, and this was my current analysis for NAS 100, right? So I was opting that if the market actually buys and breaks this level right here, then I'll be taking buys. If the market sells, then I'll be taking sells below this point right here, right? And then after 5 days, this is what the market did. Guys, this is 5 days later, as you can see, the market did respect our analysis, and this wasn't changed. Nothing was changed. The market did respect our analysis. As I told you guys that, of course, the market will break this level. I was like, okay, another buy area is over here, but I won't take this buy area because of these levels, right? If the market fails to break this high, the market will turn. If the market fails to break this high, the market will turn. Exactly, that's what the market did. The market failed to break this high, and then the market turned and went to the downside. So that's what I was saying, guys. I was like, no, even though it is a buy entry and some of us will be a bit skeptical to wait, but it was worth the wait. It was worth the wait. It was worth the wait, guys. As you can see, the market did go towards the downside and it did hit our take profit area, which our take profit area was this level right here, these two yellow lines, right? Those were our take profit areas. So the market clean, breakout, retest, continuation towards the downside, and kept moving towards the downside, right? So we are pretty much on the good side. And we also took US30. We analyzed US30 also on that video. And then 5 days later, after we dropped the video, I will show you right now what US30's reaction was to the market, right? Let me show you. Let me show you. Let me show you. You know what I'm saying? You know what I'm saying, guys? I told you, if you're too skeptical, go back, go watch the video. Go watch the video. The video is still there. It's still on YouTube after 5 days later. I told you guys, when the market was around these levels right here, I was like, no, the market will come back. When it comes back, we do what? We take sales. We take sales going towards the downside. And the market did exactly that. The market went back. Look, guys, look, minimum drawdown. The market went down. It went up, and then it failed to break this low right here. As I put this yellow line, it failed to break there, and then it went towards the downside with the impulse move. So the market is just currently respecting the zone right here. As I put this low right here, as the market is currently respecting it. So the market is fading to go towards the downside, but the market did hit our take profit areas, as it was this level right here. Right here at the bottom. So the market did hit our take profit. As you can see, the whole thing is green. It did hit our take profit, but currently the market is buying towards the upside. So we are currently done with US30 and Nasdaq. Let's analyze some new pairs, which are gold and German 30. Those are the two pairs that I'll be analyzing today. And yeah, guys, let's wait and see what's going on in the market, right? Clean charts, start afresh. As you know, guys, you always have to refresh your charts, refresh charts, and then go back to see it clearly, right? So as we're currently in a daily time frame, we can currently see that the market hasn't hit this high before. The market hit this high around 2020. But the market never came back to hit the other high, right? The market hit this high, and then it currently broke it around the 26th of December. That's when that high was broken, right? Gold never ever reached that area before. Never ever reached that area before. So meaning that gold is moving towards the upside with the impulse move, right? As I told you guys, what goes up must come down. What goes up must come down. No matter what goes up must come down, you know. So this is currently our strong high. This level right here is currently our strong high, and this is our strong low at the bottom, right? So we can see that gold is moving towards the upside with bullish movements, right? What I mean by bullish movements, I mean gold is moving towards the upside with buys, right? So gold is buying towards the upside. If I can show you real quick, gold is buying towards the upside. If you put this on a strong high, it'll make sense, but it won't make sense. So let's take this out and leave the bottom one, right? So as I told you guys about highs and lows, as you can see, the high was broken. Our high was broken, and then the market changed structure, right? Our high was broken, and then this was a triple bottom formation, which you can see right there, triple bottom formation. Our solid level of reversals was this level right here. That was our solid level of reversals, right? That's when the market, every time when the market touches this area, it goes towards the downside, right? So this is how your trading should be, right? This is how your trading should be. You should put your support or resistance and then be like this, right? This is how your analysis should be. If the market goes towards the upside, if the market breaks this level, you're taking buys, right? I'm just putting here. If the market breaks this level, you're taking buys. If the market breaks this level, you're taking what? You're taking sells. It's that simple, guys. It's that simple. It's not rocket science. It's that simple. If the market breaks this area, you're taking buys. As you can see, same scenario, right? What I could have done, because the market was consolidating, if the market breaks this area, I'm taking what? I'm taking buys. I'm not taking sells. I'm taking buys. If the market breaks this area towards the upside, I'm taking buys. If the market breaks this area towards the downside, I'm taking what? I'm taking sells, right? If the market breaks this area towards the downside, I'm taking sells. It's that simple. And then you just let the market choose which direction it's supposed to go, right? It's that simple, guys. It's that simple. It doesn't require rocket science. You just draw out your horizontal line or draw out your rectangle and say that if the market breaks this area towards the upside, I'm taking buys. If the market breaks this area towards the downside, I'm taking sells. It's that simple. And look, you could have just waited for the market and then the market chose one direction. The market chose to go towards the upside. And then you already have your analysis printed. Upside, boom, the market went. You could have easily taken profit off of that, right? So we can't make any further decisions on a daily time frame. That's why we need to go to a 4-hour time frame, right? On a 4-hour time frame, refresh chart, we go back to see what's happening, right? So on a 4-hour time frame, we can see that the market is currently hitting highs and lows, but we can see that the market is failing at this level right here, right? The market is failing to go higher than this. The market is failing to go higher than this, right? This is where the market is currently stuck at the moment right here. So it's market close. It's a Saturday as I'm taking this video right here, right? So we can see that we have a small bullish trend. Let me try to draw it. We have a small bullish trend towards the upside. Let me try it properly. We have a small bullish trend towards the upside, right? You can see that the market is currently respecting structure and everything that the market is doing, right? Drawing that and put it at the top right here. Alright guys, so that's up as slow. But anyway, as I was talking about levels, right? I was talking about these levels. As you can see, this is the level I was talking about. If the market actually breaks this area, we're taking buys. If the market actually breaks this area below, we're taking sells, right? So I was saying, be on the lookout for these type of levels right here. Be on the lookout for these type of levels. These two levels. Be on the lookout for them, right? What I mean by be on the lookout is that if the market breaks this level, it will take sells. If the market actually doesn't break this level, it will take buys. You know, that's what I'm saying, be on the lookout, because these are very sensitive areas. Right? These areas are very sensitive. Both of them are very sensitive. So what I mean is, it's very simple, bro. Trading is simple. You just fuck it up by psychology. But trading is genuinely simple, bro. You know what I'm saying? You just have to wait, bro. If the market actually breaks this big level right here, if the market breaks this level right here, we're taking buys. If the market breaks this small area this small level right here, going towards the downside, we're taking sells, bro. We're taking sells. Trading is that simple. Trading is simple. You just fuck it up by thinking too much, bro. You just think too much, bro. It's that simple. Look how the market will play out. It's either next week or today. I mean, next week, because today is Saturday. It's very simple. Trading is very simple. You just fuck it up by thinking too much. You're being so skeptical on entering. Oh, is my setup okay? What all of that. You fuck it up, bro. Trading is genuinely simple. You know what I'm saying? You just have to be on the lookout for things, bro. Like this level right here, there's a lot of touches also. Be on the lookout for that. This area right here, it has a lot of touches also. Be on the lookout for that. You know? This area also, it has a lot of touches. Be on the lookout for this. If the market actually sells, these are the areas you should be on the lookout. These three levels right here, you should be on the lookout for them. You know? Those are the three areas you should be on the lookout for if that market actually goes down. Meaning that if the market actually goes towards the downside, you should be on the lookout for these levels, meaning that the market can turn right here. The market can go down, validating our setup but turn right here. The market can go down and turn right here. The market can go down and turn right here, right? But the overall target is this level right here. As I told you guys, what goes up must come down, right? So the market can't be at that level forever. It has to come down. It has to come down. It has to come down. So what I'm saying, guys, is that be on the lookout for this level, right? So I'm not saying the market will only sell. The market can still go up. It's just that it can't go up for long, right? Can't go up for long. So guys, be patient. Be patient, guys. There's nothing that we can do. We just have to wait for the market. If the market actually breaks this level, we're taking buys. If the market breaks this level, we're taking sells. You know, be patient, guys. Be patient. Let me take a screenshot of this so that if it actually plays out, I'll show you guys in the next video. Download the image. Guys, it's that simple, guys. It's that simple. I'm done analyzing code right now. So I don't know if I should add this. Let me add it just to see if I'm validating everything. If everything is validated, everything is good. Look, guys, the same areas that I highlighted, guys, are being highlighted by SMC. This is SMC Smart Money Concept by Lax Argo. These are the concepts that I use just to validate my trading setup and everything that I'm currently doing, right? Then I did analyze my lows properly and stuff like that. As you can see, these are the levels that are highlighted by the market. These are where the big banks are. These where other buyers are, right? These are where the buyers are, meaning that if we take sells, we should be on the lookout for these blue levels, right? These are where the buyers are. So let me move this to put it here, because that is where the buyers are, right? So even though we have a trading setup that's proper, but the market is also moved by big banks. There are big people in the market, right? where the market is moved by buyers and sellers, right? There are big people in the market where I call them the big banks. They're called the big banks, right? Those are the people that control the market, meaning that, as you can see, as the market is buying or selling, the market is being controlled by them, right? So we should be on the good side of them. As you can see, my analysis says that if the market actually breaks this level right here, if the market breaks this level, I'm taking sells. But the big banks are saying if the market touches this area, we have a possibility of taking buys. We have a possibility of taking buys over here. We have a possibilities of taking buys over here, right? That's what I'm saying, guys. They trade against us, meaning that we are the majority, they are the minority, right? We should always trade with the minority, not with the majority, because majority of people, if the market, let's say right here, right, as the market is buying and selling, maybe like the big banks would be like, okay, let's all take sells, right? If a lot of people take sells, let's say, let me just play out a simple scenario for you guys. Right? Let's say you're selling something, probably like a t-shirt or something, right? You're selling it for, let's say, for $30, right? You're selling a t-shirt for $30. And then everybody wants a t-shirt for $30. Maybe let's say five or 10 people want a t-shirt for $30, right? And then let's say 50 people come and then saying that, okay, we'll buy the t-shirt not for $50, but we'll buy for $100, right? Who are you going to sell the t-shirt more to? Is it the 10 people that are going to buy the t-shirt for $30, or is it those people that are going to buy the t-shirt for $100, right? Those are the people that move the market. The big banks are the people that move the market, right? They just apply a lot of pressure and a lot of volume in the market, right? So as I'm saying, guys, my analysis says if the market breaks the structure, we take in sells. But the big banks are saying that if the market touches this area, we have a possibility of taking buys. If the market touches this area, we have a possibility of taking buys, right? So the big banks, it's either this is what's gonna happen, right? So let me just trade off for you. Let's say the market actually does go towards the downside, right? Let's say the market actually does go towards the downside, does this. It goes, it bounces, goes up again, and then it fails, and it goes down, and it bounces, and it fails, goes down, bounces, fails, goes down. It's either that's how the market is gonna move, or the market will just go straight down. It's either that's how the market is gonna move. But as I'm saying, guys, the market is controlled by big banks. The market is controlled by big banks. We should always trade with them, not against them. Meaning that if the market fails over here, even though my overall setup says I must take sells, but we should wait for these buys to get completed. If the market actually breaks above this level, we know that, okay, it might be a stop loss hunt, but if the market fails to break our resistance right here, then okay, we know that we're in the safe, guys. So let's always trade with the big banks. Let's not trade against them. Let's trade with them, you know? So that's a quicker way of also winning inside the market. So I am done with gold. Let us go to German. Dang!